This is Alan Elman, the Blue Collar Investor, and welcome to this BCI podcast number 148, titled Exit Strategies for Covered Call Writing, Hitting a Triple. We're going to be using a real-life example with Select Sector Spider Utilities, which trades on the New York Stock Exchange under the ticker symbol XLU. Let's get started. Let's first define the term hitting a triple, because that's a term you'll find only in our BCI community. This is an exit strategy where we generate three income streams in the same contract expiration with the same underlying security and same cash investment. It involves buying back the short call after entering our covered call trade and then reselling it 2 times. So buying it back twice and reselling it twice. We're going to lean heavily on our 20%, 10% guidelines, which will let us know or give us a framework as to when to buy back the short calls. Now, if we were to envision a chart pattern of hitting a triple, it would involve two V-shaped chart panels with the patterns, with the price of the stock first declining, then coming back, then declining a second time, and coming back a second time. So two V-shaped patterns, which in essence is a W. And we'll have a look at that as well. Now, success in hitting a triple depends on two things: preparation, and as a BCI member, you'll all be prepared for exit strategy executions, and then opportunity. And in volatile market conditions, these opportunities will present themselves. So let's continue on now by defining what is XLU. Number one, it's an exchange traded fund. So it's a mutual fund that trades like a stock. You can buy and sell it over the course of a trading day. And many of them, including this one, many of them have options associated with them, so we could use them in our covered call writing or put selling portfolios. Now, it's a select sector spider, which consists of 11 different sectors that divide up the S&P 500. So it's all of the utility stocks inherent in the S&P 500. Let's look at a covered call writing trade where we hit a triple with XLU. On 4/19/21, 400 shares of XLU were purchased at 67.05, and immediately the out-of-the-money 68 covered call was sold at 66 cents. Then on 4/28, so 9 days later, we closed the 68 calls at 15 cents using the 20% guideline. 20% of 66 cents is approximately 15 cents. Remember, these are guidelines. Now, 5 days later, XLU recovered, and we were able to sell those same May 21st 68 calls at 62 cents. That, ladies and gentlemen, is your double. You generated 66 cents, and now you're generating 62 cents after buying back the call for 15 cents. So that was on May 5th. And what we did, that was on May 3rd. Now on May 5th, we were able to buy to close those same 5/21/68 calls at 12 cents, once again implementing the 20% guideline. 20% of 62 cents is approximately 12 cents. Lo and behold, 5 days later, on May 10th, we sold the same 68 calls, this time at 33 cents. That, ladies and gentlemen, is our triple. Now, each time we sell an option, we put in our 20%, 10% guideline. Since we're later in the contract now, after selling the third call at 33 cents, we then implemented our 10% guideline, where we put in a buy to close, good till canceled limit order at 3 cents, the 10% guideline. And on that date, XLU was trading at 67.30, so slightly higher than the cost that we paid initially when we entered the trade of 67.05. So we talked about preparation and opportunity. Now, part of that, part of the preparation involves setting those buy to close limit orders after entering our covered call trade. So immediately after entering our trade, seconds later, we put in a buy to close, good till cancel, GTC limit order, and that stays there until we change it. And if we're not in front of our computers and those thresholds are reached, well, the short calls are then closed. And we have an opportunity then to do many things. In this case, we waited for share rebound and sold the same call again. Now, opportunities are created when the price does in fact decline and then recovers. Once again, in volatile markets, this will come up much more than in very conservative or consolidating, moving sideways type markets. Now, if we were to envision a chart pattern where the price goes down and comes up and goes down again and comes up again, we would see two V-shaped chart patterns, or a W, and that's what I'm going to show you in just a moment for these May 21st XLU contracts. Now, for those of you watching this podcast, you could see clearly that you have these two V-shaped or one W chart pattern. For those of you just listening, you could see the price of the stock after the trade is entered, sell to open on the top left, and then it goes down and we buy to close it. Then it comes up. That's the right-hand leg of the first V, and we sell to open again. Then it goes down and we buy to close number 2. And then it goes back up again and we sell to open number 3. Now let's look at the trade status as of May 10th, 2021. Our initial time value return was the 66-cent premium divided by the cost of the XLU shares at 67.05. So it was 0.98%, a little less than 1% for the month for our initial time value return. And we did have an opportunity for the share value to move up, from that 67.05 up to the 68 out of the money call. Now, as of 6/10, we had option credits of 66 cents for the first sell to open, 62 cents for the second sell to open, and 33 cents for the third sell to open. That totaled $1.61. Now, on the debit side, we bought to close at 15 cents and then at 12 cents. So we had a total debit on the option side of 27 cents. Now, if we combine the 161 and deducted the 27, that comes out to a net option credit of $1.34 on a cost basis of 67.05, and that represents a 2% 1-month return if taken to contract expiration. And that's double the initial return of 0.98%. So by implementing these exit strategies at that point in time, on May 10th, we've already doubled the initial return. And that is, once again, from preparation and opportunity. So let's summarize now. Mastering and incorporating this third required skill, position management, into our option selling trades will set us apart from everybody else. It will allow us to elevate our returns to the highest possible levels. So covered call writing and put selling is much more than just entering a trade, knowing which security to use and which option to sell. It also involves managing our trades. And the additional income streams that will be generated using these exit strategies are not luck. They are the intersection of preparation and opportunity. Ladies and gentlemen, let me tell you about our 2 best BCI packages before I go in the last minute or 2 here. The BCI package, an acronym for our best and most comprehensive investment package ever offered by the blue-collar investor. It has 18 components, 6 online video courses with downloadable workbooks on both strategies, 6 calculators invented by the blue-collar investor, found nowhere else, 5 of our best-selling books in ebook format, and our 13-month annual premium membership, which in and of itself has well over 200 components. There's well over 200 videos, our 4 reports of eligible option selling securities, and dozens of other files and resources all packaged together in our BCI package. We also have our TMC package, which includes our trade management calculator, a one of a kind, the only one in the world to our knowledge, where you can enter your trades, get initial calculations for both the individual trades and your total portfolio. Then it allows you to adjust your trades with over 20 different exit strategies and get final calculations, once again, both for each trade and for your total portfolios. Only one of its kind. Comes with a 28-page user guide and my 8th book, Exit Strategies for Covered Call Writing and Selling Cash Secured Puts, in a PDF format. To get more information on these packages, go to our website, thebluecollarinvestor.com, and click on the link that says Best Discounted Packages. There's information, including video explanations. You can also get items individually in thebluecollarinvestor.com/store. Ladies and gentlemen, I want to thank you so much for taking the time to watch and or listen to this BCI podcast number 148, Exit Strategies for Covered Call Writing, Hitting a Triple. Folks, I hope you not only enjoyed this presentation, but I also hope it puts cash in your pockets. As always, this is Alan Ellman, the Blue Collar Investor. Take care, everybody.